Morning, guys. It's Monday, the 27th of January. We are Signal Centre talking ball. Just myself, Joe, and Steve here today. How you
Excellent.
doing,
It's
mate?
just the A team.
It's the A
Lovely.
team, yes, indeed. He won't be happy to hear that, but yeah,
He
it's
won't watch it. I bet he
it's the
doesn't watch
truth.
it. We can
Yeah.
say what we want about him, and he won't watch it.
Okay, fair enough.
We'll see.
Yeah. So just a quick roundup on Friday before we get into the news and what's happened over the weekend, because it's quite a bit to talk about. We had our gun to the head trades on Friday. The only winner was my one on FTSE, which is 2.6R.
Nice.
Stevie was stopped on Bitcoin and Ian was stopped on Euro Yen. So all pretty choppy into the final few hours on Friday. Equity markets sold off, hence the reason that picked up a nice bit of steam on the
Lovely.
downside. So overall, we are holding around that sort of 40% level
Yeah.
overall. So
It's about
all
time
trading water, really.
I started taking it seriously, isn't it? Really,
Yeah,
to try and.
that would be helpful if you
Yeah.
could.
Okay. All
Yeah,
right.
cheers.
All
All
right.
right.
I'll stop playing the fool and start.
Okay, so I'll have a share screen then and show you what I'm looking at this morning. First up, looking at Euro New Zealand dollar. So first of all, this is the weekly chart. And I've been monitoring this potential head and shoulders setup for a number of weeks now. Obviously, it's not completed yet. That will only happen once it completes or breaks below this neckline here at around about 162.87. In the meantime, though, it looks though it's heading towards that key support. So looking to set up trades from the short side. This is the daily chart. So we have a downtrend, as you can see here. We had a bit of a corrective channel, which broke down last week on the 23rd. And this morning, we're seeing a bit of a retest of that this morning. So if we look at the hourly chart, just to break that down even further, there we can see the channel. We have a 78.6% fib level from the highs seen on the 23rd down to the lows on the 24th. We've also gapped open on the overnight on Sunday, and we've rallied sharply up to this level here at 168.00. We did get triggered just on that this morning on our intraday analysis. I'm going to set it again here at 167.93 on the retest of this channel and this 78.6 level. Stop loss at 168.35. Just change that. 68.35. And I'm looking to target and move down to fill that gap from this morning, which is at 166.94. So just going to go 95. So 3R on
Nice.
that. That's my trade for today.
Okay, mate. All right. As I say, I do try very hard to be sensible about these trade ideas, but let me just run you through it. Obviously, oil under pressure, gold rallied, and it's just pulled back a little bit overnight. I think there's more in it. Obviously, this isn't going to get any better anytime soon. The spread of this disease, yeah. And so I think we're going to sort of like still see that equities taking the brunt of it.
So it looks that way this morning.
Yeah, I mean, it looks a bit toppy up here. Potential, obviously, for a double top if you look at the weekly chart, but we've got a long way to go before that gets confirmed, all the way down at 10,200. So, but a good reason to, fade the bullish move. The momentum stalling with the posting of these new highs. On the weekly chart, it was a doji posted last week. We get a bearish candle this week. It could be an evening doji star on a weekly chart, which would be bearish. So I'm going to sort of like go with a short this morning on the DAX. Again, I'll try and keep the risk reward interesting.
You get your entry up a bit higher. You're on the open there.
Oh yeah, you're right. Yeah, trying to give the money away already. 13,387, and let's look for a move down to
a big old.
How about there? Yes, yeah. How about there? That looks nice. That looks like a round number of 6R. 13,387. The stop is 13,219. The target is 13,415, which is in front of the 13,413 level. As you know,
so 13. You got it wrong way around there. She said 13,220.
Yeah. Okay. So it's still in front of 13.
Yeah. Okay.
But also the stop is above 13. So 13 is my number to watch in the DAX. Always seems to have a bit of a reaction there. Maybe a silly thing to look at, but I like looking at silly things. So getting short there. Stop
Lovely.
at 13,415. Target's 13,219.
Cool. Good luck.
Cheers.
So, as we touched upon on Friday, risk deterioration into the close as a result of the Chinese coronavirus and fears intensifying on that. The number of cases over the weekend has jumped to over 2,700 and the death toll is above 80 now. Of course, there's been holidays in China which have now been delayed, so numbers, could be a lot worse than that. It may be a case of reporting, might not be too accurate around certain areas of China. So,
yeah,
remains to be seen how bad this is actually going to get. I think the
still early days, isn't it?
World
no
Health Organization are yet to say it's a global concern just yet, but it is clearly spreading about, and I think the symptoms are actually contagious. The virus is contagious before there are actually symptoms in place.
Yeah, that doesn't
which
help,
I think
does it?
is a bit different from the likes of the SARS and Ebola virus that we've seen previously.
Yeah.
So clearly risk off this morning as a result of that. The holiday in the States, the Lunar New Year, I think saw had been delayed. So I think that was adding further uncertainty. The holidays would be extended until the 2nd of February. So that's further unsettling, particularly US dollar, Japanese yen, which dipped to below 109. We've got oil prices, as you said, under pressure as well. And
a
everything
lot
just
of
taking
gaps over the weekend. So them sort of like, I think the thing about it as well, the markets have had the move over the weekend, and whereas previously they seem to have sort of recovered them losses in the stocks quite quickly, they haven't done it today, this morning.
No.
I mean, you've got the US to come in obviously this afternoon, but I think it's quite a pivotal day today. If we don't get that recovery, there could be a sort of like an extended sell-off for the rest of the week. So
when you've got equity markets, particularly like the US, that are behaving like a bubble, you've got to think there's been a lot of people that are waiting for any kind of excuse to dump out in order to secure their profits. They must be feeling a little bit nervous up there.
Yeah.
So that could have a bit of a snowball effect potentially. Data-wise today, something to watch out for your DAX trade, Steve. We've got the IFO business climate data, which is due out at 9 a.m. So keep an eye on Euro crosses and DAX.
Yeah.
And then the week ahead, we've got quite a lot of bits and pieces going on. Obviously, aside from what's going on with the virus worries in China, we've got the continuation of the impeachment trial, which is set to continue. And we've had the president mounting his legal defense over the weekend. We've got the Federal Reserve's first meeting of the year, which they'll be setting out monetary policy for the year ahead, expected to keep things unchanged. But we'll see on Wednesday. We've got a lot of earnings due out, particularly notable from Apple and Microsoft.
Ooh.
So any kind of, underwhelming reports there bundled together with what's going on elsewhere, that could see people hit the exits. We've got the Bank of England as well.
Yes.
We've got Mark Carney's last meeting before he departs in March.
Is he going to go out with a bang?
Possibly.
I mean, it's not all down to him, obviously. They've got sort of
they've got a vote on it, haven't they?
Yeah, the policy committee. But there's a chance of a cut there. There has been sort of like leaning towards that. So could be
the
interesting.
Commentary we've got here said earlier this month that the Bank of England could delay any interest rate decisions until inflation is well above its target as a way of boosting the economy. This is despite the outgoing governor's remarks, and strategists at RBC Capital Markets still think it's a live meeting. So a bit of uncertainty around there, and there could be some action on the back of that. That's Thursday. And of course, we've got Brexit Day.
Oh.
UK set to leave the European Union on Friday after more than 3 years on from the referendum.
Feels like it's just going to happen and no one's even going to know.
Well, I think that's probably best, isn't it? If it just sort of just goes under the radar and we just crack on.
It's weird, isn't it?
It is a little bit, yeah.
All the sort of tension and the build up around it, and then all of a sudden people will wake up next Monday and we'll be out and they'll be saying, "Oh, I didn't realise that.
Yeah.
Hold on, what's going on?
Well, I can't get to France anymore."
Panic! Don't panic.
So that pretty much wraps up everything. Quite a lot to be mindful of, and I don't think it's going to be a particularly easy week if you are trading. So just be careful, use your stop losses, and yeah, just take it easy, I think.
Or don't use stop losses. Then if you're just using your profits, that means you're making money, doesn't it?
You've got to get profits in the first place. So
Oh yeah, that's a
yeah,
little minor.
that's the
Little...
caveat. Yeah, so I think that's pretty much everything from us. Ian should be back with us tomorrow, and we'll see how we get on with our trades.
Cheers.
Yeah, have a good one.